welcome everyone to today's highly anticipated ACH changes and their implications webinar. Um, we're thrilled to have you join us for this deep dive into the latest developments in ACH regulations, part of the American FinTech Council's learning programs. And as you know, AFC plays a pivotal role in advocating for innovation, consumer protection, and fair regulation within the fintech industry and banking and financial industry. And that's part of why we do these programs to ensure that as members and people interested in the going-ons and financial regulations, you get the latest and greatest updates on regulations that will impact you. And today's session is brought to you in partnership with FORVIS Mazars, and we have exceptional experts with us today in the Marks, Mark Burnside and Mark Deaver, who will be sharing their insights and expertise. And I'm Colin Darke. I'm a senior advisor at AFC, and I'll be moderating our discussion today. Our goal is to ensure you walk away with a clear understanding of these changes and practical strategies to adapt your business practices accordingly. We have a chat feature and a Q&A feature, so feel free to use those if you want to ask questions or request any clarity on anything. So let's just dive right into the marks, and I'd appreciate if you guys could initially just give a summary of the key changes to the ACH rules that will take effect and explain their intended impact on, in particular, fraud prevention and fund recovery.
Thanks, Colin. And good morning, everyone. I'm one half of the marks that are with you this morning and we want to talk about those. So some takeaways for you. It's just a couple of goals for us today. I'll review, as I have every program for the last 4.5 years, with some payments proposals and other compliance things that you'll need to be aware of going forward. But we really want to talk about the changes to the operating rules and guidelines from NACHA. But I always try to leave you with some takeaways. I call them the takeaway tidbits. And fraud's going to continue to rise exponentially. Last year, the Federal Trade Commission received 2.6 million reports of fraud from consumers across the country and $10 billion in reported losses. Now, if that's not staggering to you, it's staggering to me. And imposter scams are number one. Speaking of fraud, Treasury has labeled fraud as the largest revenue-generating crime in the country today. Had you asked me 2 years ago what was the largest single generator of illicit proceeds, I would have said drugs. And of course, drugs and drugs and drugs and just lots of drugs. Okay. But now fraud has overtaken drugs. Drugs are a close number 2. In fact, it's almost 1 and 1A. But now fraud is the largest revenue generating crime. For most of its 50 years, NACHA focused on unauthorized debit entries posting to the receiver's account. Now, NACHA is growing ever more concerned about credit push fraud, or what Interpol defines as APP, authorized push payment fraud, where the consumer authorizes a payment, but they're authorizing a payment because they were tricked by an imposter or a scammer to send them money under unscrupulous practices and that. So, for example, business email compromise fraud, vendor impersonation fraud, payroll impersonation fraud, and account takeover fraud. So NACHA has gotten concerned with that, and these new rules are going to shift the focus of the ACH not away from, but adding to the pieces and the focus on the credit push, because it's the receiving depository financial institution, the RDFI, that may be in the best position to identify questionable or suspicious credit transactions. Because remember, the backside of a fraudulent debit is a credit somewhere else. And it's that receiving institution who is seeing those credits flowing in. The role of the RDFI for 48 years has been one of, okay, send it to me. And if I can post it, I'll post it. And if I can't, I'll return it to you. And I'll tell you why I can't post it. You got a bad account number, or you don't have an account number that I can use at all. And it was just kind of like we sat back and it was, oh, okay, fine. Well, now the RDFI is going to have to take a more active role, okay, in the identification and thwarting, because they are probably in the best position to at least detect, and if not detect, at least thwart and hopefully recover misappropriated monies. So if you are an originator of ACH entries or a third-party sender within the rules, 9 of the rules changes will either directly impact or at the very least assist you in originating ACH entries. And if you're a third-party receiver, 6 of the rules changes will directly impact your processing for your clients as well. So those are the takeaways, the things we should remember as we're going into this process as well. Of course, I'd like to just start out with a quick reminder on things. This, I don't know if this is going to apply to any of you. FinCEN, the group of Treasury that administers bank secrecy and anti-money laundering, published this yesterday afternoon and said they were sending 2 final rules to the Federal Register. One hit this morning, okay, and it's the final rule on the real estate transactions, real estate transfers. Now, anytime, and this does not kick in until the end of next year, but anytime there's a real estate transfer of residential real estate to a shell company or a trust without a mortgage, the beneficial owners will have to be identified and that information provided to Treasury. There's been a geographic targeting order doing that in specific geographic areas over the country over the last 6 years. Now they're expanding that to the entire country. I don't know if any of you are involved in the residential real estate game. That just hit the Federal Register this morning, though. It's in today's Federal Register. So I just threw that slide in there to say, hey, if that impacts you, there it is. If you're involved in wire transfers and if your clients or your partners are using Fedwire, just know Fed has a proposal to modify the Fedwire processing hours. Fedwire now today operates 5 days a week, 22 hours a day. There's a proposal on the street to go to 7-day-a-week operation for Fedwire. It'll still be 22 hours a day. They need 2 hours a day to close and settle and balance, but they want to work 7 days a week. If you have any interest in it, you have until this next week, September the 6th, to make comment on that. And of course, your bank partners that you're working with to do Fedwires, they've been working very hard over the last 2 years to get ready for the migration as Fed is going to adopt the ISO 20.22 message format standard, and they want to do that next year. So hopefully you've been involved in the testing, and that if you've not, and you're connected electronically to your bank or credit union partner, just make sure you get involved in that test. You don't want to be in the position of not being able to send and receive wires starting March the 10th next year. If you were involved in an OFAC incident, okay, where you have to make a report to OFAC, the Office of Foreign Asset Control, they shifted earlier this month, and now you'll have to do everything electronically through the OFAC reporting system, the ORS. Okay, in the past, we were able to either mail in a report or email in a report of the if there was an OFAC incident. Okay, well, now we have to use the ORS, the OFAC receiving system, to be able to do that as well. I was looking. It's on mine. I was trying to find my pointer. Okay, I'm sorry. Sorry for the pause there. But if you have an OFAC incident, remember, if under OFAC, you know, if there's an entry for a specially designated national, one of two things happens. You're either going to freeze the assets or you're going to reject the transaction. But within 10 days of either of those, you have to do a report to OFAC. Well, those have to go in electronically now, and that all started earlier this month as well. If you are a covered legal entity, which is defined as a corporation, an LLC, or you were created in this country by filing of a document with the Secretary of State or similar office, then remember, you have to register your beneficial ownership information. And if you were formed before January the 1st this year, you have until January the 1st next year to file that initial report. Okay. Now, there are 23 types of entities that are excluded from the BOI reporting. So if you have more than 20 full-time employees in this country, you're operating in a physical office in this country, not a PO box at the UPS store, but an actual physical office, and you filed Form 1120 showing more than 5 million gross receipts or sales last year, well, then you're excluded. But I suspect some of you don't meet that exclusion test. And so you are going to have to file and provide Treasury with your beneficial owners. You go to FinCEN's website, okay? You click on the BOI link, and there'll be the link to get you there to do that. But just remember, you have until January the 1st to do that. Just from an informational only standpoint, in yesterday's payments.com little newsletter that comes out every day, interesting article, how fintechs are fighting identity theft and identity fraud. So go to payments.com, it's not payments spelled out as PYMNTS.com yesterday, and there'll be a link to that. But among all the activity that institutions encounter, 42% relate to identity. With the dark web ID data dumps and artificial intelligence tools available for bad actors, these schemes may become easier to execute. Okay. And so it's an interesting read if you get a chance to pop out there as well. And just as a quick reminder, the sword of Damocles continues to hang over our head. This proposal came out last fall. Okay. The CFPB proposes new federal oversight of big tech companies and other providers of digital wallets and payment apps. And what they'd like to do, of course, they would like to subject larger non-bank digital consumer payment companies to the CFPB's authority to conduct exams, help ensure consistent application of federal consumer financial laws across the marketplace. And specifically, the proposed rule would do those two things as well. The comment period closed 9 months ago. Believe it or not, it closed 9 months ago. But we're still waiting for any guidance on that that they would like to offer us as well. So just a quick payments proposals and compliance update on that. Any questions I can answer on that? Or any questions Mark can answer on that? Mark's really working with the fintechs and the bank partners that are dealing with that. Any questions you might have on that specific piece? We're both surprised that the CFPB hasn't finalized anything, but the thought is maybe they got a whole bunch of responses to the request for comment. And so by law, they have to look at each of them and evaluate them as well.
Well, and Mark, would you mind if I just make a real quick comment?
Yes, please. Jump right in.
So one of the things to kind of keep in mind, especially as we're going to be talking specifically about the ACH aspects of this, is to consider the history. Like when we talk about regulatory compliance, one of the things that happens, fairly frequently is, they would talk about the development of the ACH system. It was developed initially with low risk transactions in mind. It was really primarily the idea was it was going to be targeted to payroll activity and benefit payments and things like that, right? They didn't really understand how that system would be leveraged going forward, and then the attendant risk that comes along with that, right? So what we're seeing with some of these changes is really reactive. It's reacting to the amount of fraud activity and different aspects and different methods that the system is being utilized in today's environment. So when we get into the new requirements for additional monitoring for potential fraud activity or suspicious activity and things like that, it can help to kind of keep in mind that this is their effort to address things that they didn't think about to begin with, right? In kind of a reactive way. And that goes for the comment, that proposal of last November as well, is, they attempt to expand the footprint or the reach of the regulatory agencies from an oversight standpoint to help kind of control these increased risk activities and spaces and things like that. So sorry, I just kind of wanted to throw that in there.
Anonymous, yes, we're going to provide the slides to the folks at the FinTech Council and that because they're recording this session so that folks who could not participate live, they'll be able to view the recording and they'll have the slides and they'll have the PDF as well. So I'm sure you'll be able to come in through the system and be able to get those as well. So I'll be uploading that to them as soon as we wrap up here. But thanks for the question though. So let's get into rules changes. Let's just do basic ACH 101 just to be sure we understand all the players. Okay, the receiver is the person who starts the whole process by authorizing the entry. Nothing begins until the ACH entry is authorized. It could be a consumer or it could be a business, but nothing happens in ACH until the receiver authorizes the transaction. You told your employer it's okay to credit your account electronically with that voluminous amount of pay you receive each month, or you told Spectrum it's okay to debit your account electronically to pay for your cable TV bill. Now, armed with that authorization, then the originator springs into action and they create that file of entries they want introduced into the payment system on their behalf. And they transmit that file to the institution who's going to do that for them. And that's the ODFI, the Originating Depository Financial Institution, a bank, a savings loan, or a credit union on behalf of the business client. The originator introduces those payments into the payment system. Now, some of you may be sitting out here in the role of a third-party sender. You may be working with clients who don't have a relationship with a financial institution, but you have the relationship with a financial institution, and so they are actually going through you. You're originating those files. You're uploading them to an ODFI, who then gets it to the payment system. Okay. There's two ACH operators in this country, the Fed and the clearinghouse. Okay. Most of your community-sized institutions, not only banks and savings loans, but credit unions, are probably using the Federal Reserve. The folks up in the Northeast are using the clearinghouse because they're centralized right there in New York. But either one serves as ACH operator. The operator then sorts them out and sends them, those entries, to the institution who holds the account of the receiver, the RDFI, the Receiving Depository Financial Institution. Again, a bank, a savings loan, or a credit union who holds the account of the guy who started the whole thing, the receiver. Every ACH transaction begins here because every ACH transaction begins with an authorization. Some of you may also be playing the role out here as a third-party receiver, where again, the receiver is working with you to receive their entries on their behalf, and then you pass the information off to them as well. Okay, so I didn't have those two satellites on either side, but we have, you know, two other spots that are dealing, or two other players that are dealing in the domestic world. There's no statute, law, or regulation that says every financial institution has to be an RDFI, but I will tell you they all are, because if they're not a receiving institution, they're not getting direct deposit to pay, they're not getting Social Security credits, they'll have like 4 customers for a week and a half, and then they'll be closed. So by virtue, all financial institutions are going to be RDFIs. Many are wearing 2 hats, though, okay, and they're originating institutions as well. Now, I still have occasionally folks in class who just receive only, but they are few and far between. Now, long before the CFPB came along, NACHA was born. This is the 50th anniversary year for NACHA, okay? In the late 60s, some folks both on the West Coast and on the East Coast looked out across the land and they saw all these paper checks being processed, and they saw the growth and the volume of the paper checks. And just like Mark said, they said, you know, if we don't start doing something different, okay, there's got to be a better way, a more efficient way, an electronic way. And if we don't do something different, we're going to start literally drowning in paper checks. And so the early regional payment associations were formed. There was one down in Georgia. I always loved its name. It was called Gotcha. I love that regional payment association. Unfortunately, they merged with somebody else, so Gotcha went away, but it was a great name. And there was a group in California, but there were 4. There was a group up in New England, and 4 of them got together and they created NACHA literally 50 years ago this year. This is the 50th anniversary of NACHA. So long before the CFPB came along, NACHA was already established in the rules and the guidelines. Well, 50 years later, guess what? As Mark indicated, we're moving a ton of volume through the ACH network. 31.5 billion entries flowed through the network last year. And on a direct send basis, there's usually another 4 billion or so that are going off network, where they're direct sends and that. But those 31.5 billion entries carried a dollar value last year of $80 trillion. Okay. Now that's obviously more than just payroll and Social Security. And you see that all of these different applications provided new and increased transactional volume. Same day ACH was up 22%. Business to business payments were up almost 11% last year. Just a couple of interesting factoids. Total volume of ACH entries last year represented approximately 94 entries for every human in this country. And the dollars values being processed through ACH have increased by more than $1 trillion a year every year for the last 11 years. We've been on quite a growth spurt over the last 11 years. And up until 2022, ACH volumes had increased by more than 1 billion entries a year every year for 7 years. But in 2022, we missed the mark. We only missed it by 100 million, but we missed the mark. We broke the string. And of course, what happened was in 2021, all of those COVID relief payments, or well, not all of them, but many of the COVID relief, ACTC, EIP, UI, all of that stuff, a lot of it was flowing through ACH. And of course, it wasn't there in 2022. And so we had that one-time spurt that went away. So we broke the chain, but we're starting another chain. So the numbers are up and quality's up as well. When you look at all those entries, last year, the overall net rate return rate was just 1.4%. Only 1.4% of all the entries ended up as some kind of any kind of return whatsoever. And more impressively, the unauthorized debit return rate remained unchanged at 0.03. 0.03% of the debits got returned unauthorized. And more impressively, 0.02% were return code R10. R10 is return reason code. We slap on a debit we're returning unpaid because the consumer has sworn, not at us, but to us, that they did not authorize that transaction. 0.02%. That's a phenomenal quality ratio. And on the business side, again, 0.02% were return code R29, where the business client says, this debit that's posted to my account was unauthorized. That's a phenomenal credit ratio, a phenomenal ratio. Now, the one that bothers me is the administrative return rate, and almost 0.3, a little less than 0.3, is 0.28% of the entries are getting returned because the account number is right. It's not right. The account number is either invalid, or I can't locate it, or it's just, there is no account of that. And that should be the easiest one for the originators to get their hands on. Why? The question that we should be asking to the originator is, why can't you get the right account number? That's of the three numbers, that's the one that bothers me the most, because that should be the easiest one to deal with. But anyway, quality's up, volume's up. It's a neat time to be an ACH. So on March the 15th, the voting members of NACHA came along and made a number of rules changes, passed a number of rules changes, some of which will impact what you are doing from an ACH standpoint. And so the general rule for web entries, again, if you're an originator for your own entries, or you're a third-party sender originating for other folks, if it is a consumer-to-consumer credit, you have to use the web SEC code. Okay, SEC code, basic ACH. Every ACH entry carries a three-letter identifying number, the standard entry class code. SEC in the ACH world is not the Southeastern Conference. It's the standard entry class code. It tells the payment system what type of entry that it is. Well, web is an internet-initiated entry, okay? Originally, web was just to indicate that the authorization was granted not by the consumer signing a piece of paper, but by doing it in an internet session. Well, there were, if they were doing it over a wireless network, or if they had a standing authorization, they may have been originating consumer-to-consumer credits using a different SEC code. The rules changed that went into effect, and this one's already in effect. You have to use the WEB SEC code. So please, if you're originating those entries, please do so as well. You need to be using the proper code as well. Another minor rules change that kicked in March and went into effect at the 1st of June. If a receiving institution receives an entry that for some reason they can't process, but they know how to fix it, okay? Let's say the account number is off one digit, they transpose two numbers in that, and they can go ahead and fix it. They know it's okay. And at times they will send back what's called a notification of change, an NOC, saying to the originator, hey, look, you're not doing it right, but this is what would fix it so it'll flow through seamlessly next time. Well, if as an originator you receive an NOC, you have to act on it. You have to do the requested change. Well, this change said if it's a single entry ACH, okay, if it's a single entry, it's not a recurring payment, but it's just a one-time, it's a one-off deal, you can go ahead and ignore that NOC. So they made it a little easier for you. I don't know any RDFIs that are doing NOCs on single entry, but apparently there were some because they put that in as well. And then another help for you on the origination side, there is within the ACH world what we call a pre-notification. Okay, it's a $0 ACH entry. It has no value, obviously, but it has all the data that the entry is going to carry. And ideally, under the rules, it's sent 3 days before the live transaction with money is going to go. And what the originator is saying to the RDFI is, hey, in 3 days, I'm going to start sending this with real money. Is it okay? Now, you don't have to use pre-notes to verify the entry, but some of us do. Well, pre-notes were always used to validate the first entry. But when they passed the micro-entry rules a couple of years ago, they didn't put a restriction on just the first entry. You could use a micro-entry to validate the account number anytime. And so all they did with this change was they said, okay, you guys can use pre-notes anytime to validate an account. If you want to revalidate an account number, it's okay to use the pre-note. So that's an opportunity for you as well. So those are the pieces that just kicked in 2 months ago and could be of benefit for you going forward. Now, in the fall of 22, NACHA published this document, a new risk management framework for the era of credit push fraud. As I mentioned, NACHA is getting concerned about credit push fraud. The BEC fraud, an employee at the company who's authorized to do, say, outbound Fed wires, receives what he thinks is a legitimate email from the CEO. It's only off one tiny little digit and he misses it, and he'll wire hundreds of thousands of dollars directly to the fraudster. Well, that's BEC, that's business email compromise fraud. Mark, do you want to share that? You had a wonderful example of one where you saw there was a AI generated BEC fraud the other day.
Yeah, that was so I saw this article in a couple different locations in the last few days. So basically the idea, and I believe this happened in the UK, where an employee received an email from the CFO of the company asking for the employee to process certain wire transfers. And then immediately after receipt of that email, they scheduled a conference call. And on the conference call was the CFO and several other employees, along with this one employee that received the email. And it turns out that everyone on that conference call was AI generated. So every person, including the quote unquote CFO on that conference call, was an AI generated visual. So it wasn't the actual people. And that individual employee ended up sending wire transfers over 20,000 or 20 million pounds and over 20 million or $25 million in value in US dollars, strictly driven from fraudulent use of AI tools, artificial intelligence tools and things like that to generate fake visuals on a conference call. So again, we're starting to see how AI, how scammers are trying to leverage and getting creative in how they're leveraging artificial intelligence and things like that to create fraud and scams and things along those lines.
I mean, it's bad enough they could dummy up and fake out the callbacks where we actually did a phone call back, but where you actually get an AI generated meeting, that one's just really scary. If you're in the payments world, that's just really scary. The vendor impersonation fraud, this is not new, but our clients get tricked into this all the time, where a supposed contractor, contacts them, they owe these guys money, and they can't say, oh, by the way, we changed our bank account, start sending our payments here. And without any validation, they go ahead and do it anyway. The one that scares me, of course, as an employee is the payroll impersonation fraud, where the scammer targets us and our human resources departments. They'll impersonate the employee and contact HR directly or through the payroll portal using stolen credentials. And then they change the account number to where the pay is supposed to go, and the fraudster gets to pay directly. And then account takeover fraud, it's been around forever, where they steal they obtain the credentials for the bank account, for the business bank account, and pushes credits to their own account as well. The scammers are busy, though. The FTC has published a number of pieces of data. This one just came out in June, but increases, okay? It's just starting, but it's increases in cash payments to government impersonation scammers, okay? FTC and other government agencies alert consumers to risk of scammers claiming to be from the government demanding money, demanding cash, okay? FTC data reveals the impersonation scammers are targeting consumers for payments in cash, with the amount of cash reported lost nearly doubling in a one-year period. Last year, consumers reported losing $76 million when paying cash to government impersonation scammers, up from $40 million in 2022, a 90% increase. And in just the first quarter of this year, consumers reported losing $20 more million to government impersonation scams when paying in cash. The median loss for consumers who reported paying cash to the government in the first 3 months was $14,740. Consumers have reported mailing cash. I don't know what happened. I remember I was in grade school when they taught us, do not mail cash, do not put cash and send it through the mail. I mean, we've known that like forever, okay? And I was going to school when we walked barefoot 6 miles both ways uphill in the snow, okay? So, I mean, I've known that like forever, as well as handing cash to drivers sent to collect money. I mean, who's going to walk to the end of their driveway and hand cash to a guy in a car? But they're doing it to the tune of $76 million last year. But the scammers are busy not only impersonating the government, but they're impersonating businesses as well. The top businesses in terms of scams are Best Buy, Amazon, and PayPal. But the largest losses are from scammers impersonating Microsoft and Publishers Clearinghouse. I didn't even realize they were still around. I never mailed my envelope back in, so they finally dropped me from their list, but apparently they're still around and active. But I never bought a magazine, so I didn't know. But I mean, those numbers are just staggering how much is getting lost in that. And of course, in April, they summarized for us the Sentinel and the data coming out of the FTC Sentinel network and that. Now, these types of scams aren't new. The scammers have switched things up. Scams starting with the phone calls have dropped over the last 3 years, while reports of scams starting with a text or an email have increased over the same period. There are many of these. The top 5, though, are copycat account security alerts, phony subscription renewals, fake giveaways, discounts, or money, bogus problems with the law, and then, of course, the ever-present made-up package delivery problems. I probably get a text every week saying that my package was unable to be delivered. Please click on this link to arrange for delivery. And of course, I haven't ordered anything for a long time. So how can we spot and avoid? Never click on links or respond to unexpected messages. Don't believe anyone who says you need to buy gift cards, use a Bitcoin ATM, remove money to protect it or fix a problem, and then slow down. The scammers want to rush you. 5.4 million total reports went into Sentinel last year. 2.6 of those were fraud, and a fourth of those had a loss totaling $10 billion. And of course, the top 5 were imposter scams, then online shopping and negative review scams, prize sweepstake and lottery scams, investment scams, and business and job opportunity scams as well. So looking at all this fraud out there, Notch said, okay, we need to do some things. We want to redefine the role of the RDFI, taking it from passive to active. We've already talked about that because the RDFI is in the best position to identify questionable or suspicious credit payments. And so they're stepping up the RDFI to be not passive, but active. We need to enabling and provide information sharing among institutions. We want to encourage information sharing. And under exception 15 of Reg P, we can share NPI with non-public personal information with a non-affiliated third party to prevent fraud. Okay, we don't need any special processes to do that. We've already got that carved out of the privacy regulation. And then we need to do a better job educating our consumer clients to all this fraud that's going on. So that came out in the fall of 22. Last year, then in the summer of 23, Notch issued the proposals on these rules that they have now taken into account. There were actually 9 proposed rules changes. All of them went in. Some were 5 went in as proposed. 3 were modified, and 1 was, well, I'm sorry, I misspoke. 8 were adopted. 1 did not get sent to ballot, but they've made it a voluntary recommendation regarding formatting and that. But the biggies, okay, the biggies. On the origination side, the rules change, and this kicks in June of 2026. So we've got a little time to work on it. That's the good news. The bad news is we only have until June of 2026 to deal with that. But all ODFIs, the banks and the credit unions that you're working with, each non-consumer originator, each third-party service provider, and each third-party sender, many of you are third-party senders, you have to establish and implement risk-based processes and procedures reasonably intended to identify ACH entries initiated due to fraud. Regular fraud detection monitoring can establish baselines of typical activity, making atypical activity easier to identify. At least that's what should happen. Now, this will be a major impact to those of you who do not already have fraud detection processes and procedures in place. Now, if you've been originating web debits, you've had this process in place all along for the last 4 years. But if you haven't been originating web debits, you may not have this. And so now you're looking at June of 26 to make sure that you can get it into place. Now, all of your bank clients that are serving as ODFIs have to have this in place by March the 20th, 2026. But unless you originated 6 million or more entries in last year, your kick-in date is not until June of 2026. Now, they did make some changes from the original proposal. In the original proposal, you were going to have to establish a commercially reasonable fraud detection system. All right. So they've thrown away commercially reasonable. They've thrown away the fraud detection system and they've replaced it with processes and procedures reasonably intended to identify. So that means that we don't have to catch every one of them. Okay. It's not infallible. It's just reasonably intended to identify. And the procedures apply to the extent relevant to whatever role you are playing in the process as well. It allows us to expressly consider steps that other participants in origination are taking to monitor for fraud and designing our own process. And so what the world's going to do, we can adopt going forward. Now, I am sure between now and then, there will be vendors coming to the street with product solutions on that. You may actually be helping with product solutions for your bank clients as well. Thankfully, monitoring is not required pre-processing, or that 30 billion a year would just slow down to nothing. And of course, the banks will have to add it to their audit procedures going forward as well. So that's on the origination side, fraud monitoring, establishing processes and procedures reasonably intended to identify. Okay. On the receiving side, got to do the same thing. The RDFIs, the receiving institutions, will have to implement the same thing. Risk-based process and procedures designed to identify credits coming into them that are the settlement of a fraudulent debit that took place someplace else. Because the backside of a fraudulent debit is a credit to another financial institution. Okay. A risk-based approach can consider factors such as transactional velocity anomalies, say, for example, SEC code mismatch with account type, or just, this client has never received, more than 2 or 3 credits a month, and all of a sudden they're getting 1,000 credits. Okay, that'll be a transactional velocity. And then account characteristics we can look at. Is it a brand new account, or is it a real old account? What are the average balances? What's happening in that? This aligns with what should already be happening in the anti-money laundering side. Okay. Theoretically, every financial institution is supposed to be monitoring and watching for suspicious transactions, of which ACH should be part of. Now, that's what's supposed to be happening. In your small country banks, is it? We don't know. Okay. Now, the RDFIs will have 2 options. If they detect a potentially suspicious transaction or an anomalous transaction, they'll have 2 options. Okay, and you'll need to understand this if you're on the origination side. They'll either just return it. Okay. They say, okay, this just doesn't look right. They'll return it using that code R17. And I'll explain that in just a second. Or they may delay availability. They won't post it right away because this rules change gives them the ability to do that. And then they'll contact you and say, let's talk about this. Are you sure this is a legitimate entry? Are you sure that the fraudsters haven't attacked your client's account and are trying to get away from that? So the RDFI, if they see something strange, okay, they'll either return it or they'll delay the posting and try and contact you as well. So just know that they've got a couple of solutions available to them with this rules change as well. Most of the RDFIs that you're dealing with, it's a June 2026 rules change. It's only Gargantua that's going to have to deal with it from a March of 2026 standpoint, because they would have had to receive more than 10 million items last year before they kick in that March date as well. And just like on the ODFI side, the rule does not require pre-posting monitoring of these credit entries, but ideally we get to the point where we would see something that was anomalous as well. Changes again? Yeah, Colin?
Just a quick question. Could you explain risk-based a little more? Like, is that just what business the bank is, or if I see my company as low risk, do I not need to really put in any new processes and procedures?
When the proposal first came out, Colin, I'll tell you, they said doing nothing was not commercially reasonable. Okay, even if you were considered to be low risk, doing nothing. I mean, they actually typed those words into the proposal. Doing nothing would not be commercially reasonable. But if all the low risk folks are just, for example, using their current AML risk management software and feeding the ACH entries into that software to let that software do what it does best, which is look for anomalous or inconsistent transactions, then that should meet the needs. Obviously, it's always going to be examiner scrutiny and examiner's opinion as to whether or not we've done it correctly or not. But doing nothing is not going to be sufficient, even if you're low risk. Okay, you'll have to have something in place to be able to at least detect it, not before it happens, but after it has happened as such. I believe that's Notch's intention, is that we're not just going to say, well, I'm low risk, I don't have to do anything. No, I think they're going to be expecting all of us, and the institutions that you're working with are going to have to do something. Okay, may not be extreme. They may not have to go buy $1 million system, absolutely, but they're going to have to do something. They're going to have to do something.
And that's something to just kind of be aware of as well. Excuse me, is that, you know, for regulatory compliance, you know, almost everything in today's environment is risk driven. So, you know, the higher risk that we have in certain spaces, the more processes, the more controls, the more efforts we need to put into managing that potential risk. And, you know, Mark Deaver has mentioned, you know, monitoring platforms and things like that a couple of times so far, because historically, you know, financial institutions have really leveraged software platforms for monitoring, for automatic monitoring of unusual activity or suspicious activity, including within that ACH space. So where we might see some impacts on the fintech side is where fintechs might need to consider leveraging those kind of software capabilities, right, as opposed to just at the institutional level, because banks and credit unions have been using those kind of platforms for years, and so those systems are available. You know, there just may be a little bit of a larger audience for those types of systems for monitoring.
Exactly. Yeah, exactly. So your receiving institutions are going to either establish process procedures intended to identify entries that are suspected of being unauthorized or authorized under false pretenses, or ensure that existing processes and procedures are satisfactory for this requirement, including updating the systems, as we just talked about. What may be a challenge to the banks is that they may need to enable information sharing internally between teams that monitor transactions for suspicious activity in operations, product management, and relationship teams. And a lot of times those folks aren't talking to you. In some institutions, they're not talking to each other. They're going to have to start talking to each other, okay? Not only systematically, but they're going to have to start communicating, not only internally, but with you guys as well. Now, potentially, these impacts are significant, okay, but they're intended to reduce the incident of fraud that use ACH payments. And Notch is trying to get, well, know what Notch is trying to do, Colin, is they're trying to get out in front of this, okay? Before the CFPB comes along and says, okay, we're going to do this via regulation, Notch is going to police itself, okay? And it's going to put some procedures in place so that we don't get to the point where the CFPB feels the need to pass some new regulations and put a burden that we may not want to be able to. We can do here. We've got the flexibility to develop tools ourselves to get out in front of it, as to ward off some regulatory changes on that.
Well, and I would also throw in there that there, you know, part of this too is that there have been cases against institutions and credit unions driven by the idea that their monitoring of ACH activity was not sufficient and allowed fraud activity to take place, driving consumer harm, right? So there have been cases specifically relating to that ACH activity in space, relating to, and the institutions called out for a lack of sufficient monitoring for potential fraud and stuff like that within that space. And so again, this is, like Mark mentioned, this is Notch's effort to try to get out ahead of that before the supervisory agency come out and say, you have to do this and you have to do that and so forth.
Yeah, exactly. So let's get into a broader discussion on the tools that they're making available to us through this process. I mentioned the RDFI will have the opportunity, if they detect I'm going to learn how to pronounce that word without any problem. Anomalous credit. Okay, they have two options. They can return it using code R70. If for some reason an inbound entry cannot be posted to an account, the RDFI doesn't take the loss. They can return it. It's just a return entry. But when we return an entry unposted or unpaid, we have to provide the originator with an explanation as to why we didn't post the entry. And we use a series of codes. So when you see an R with a number behind it in the world of ACH, that's a return reason code. Now, the code we use the most is R01, okay? insufficient funds. Okay. The guy's got no money. Sorry about that. You lose. We don't. Haha. R01. But there's a whole slew of codes. Well, R17 is the code that carries the designator questionable. In fact, questionable is actually placed in the entry field that gets then that actually gets placed on the receiver's statement. But what questionable says, and when the R17 code comes back in the R17 and the questionable in there says to the ODFI and the originator, okay, the receiving institution said, this is not normal. This does not seem right. This could have a problem, and we're just not going to make it available. And we're just going to send it back to you, and you guys can either determine if it is valid and legitimate, in which case go ahead and reinitiate it, or maybe you got a problem that you need to deal with in that. And so that'll be one of the two options that the RDFIs have, is they can see that credit and say, no, this is not right. We're just going to return it. We're going to get it right back to you. We're going to do it with the R17 code. And see, R17 is there. R17 is not a new code. It's been there, and the questionable has been there, but they're now expanding it to be used so that if we detect or we perceive that entry has been originated under false pretenses, defined as the inducement of a payment by a person misrepresenting the person's identity, or misrepresenting the person's association with or the authority to act on behalf of another person, or misrepresenting the ownership of the account to be credited as well. So that's a new term within the NOTCH rules, is the false pretenses. So if the RDFI suspects that this was originated somewhere else, the debit was originated somewhere else under false pretenses, and the credit's coming in, they can return that R17, and that says to the ODFI and the originator, or if it's a third party, if it's you in your role as a third party sender, if you're going to get it before the originating client, that's going to say, okay, the receiving institution doesn't think this is normal. Okay, and they have not posted it. They've sent it back to you. Let's all get together and talk about that. The other thing the RDFI can do, though, is they can delay making the funds available. Okay, they have the right under the rule to say no, we're not gonna make it available. Okay, because what the fraudster wants to do, of course, is they put the debit, they do the unauthorized debit somewhere else. The credit comes in here. They're immediately going to hit, as soon as it hits, they're going to turn it around and try and wire it overseas or buy Bitcoin or something with it. And so what the RDFI now has the ability to do is say, no, I'm not going to make that available. I'm not going to post it yet. Okay. I'm not going to put it in a memo post yet. I'm just going to kind of park it over here. I'm going to delay the availability, and then I'm going to try and contact the ODFI and find out what's going on. Okay. And so starting October the 1st, they will have the availability to do that. They will able to delay the availability. Now, if the receiving institution decides to do that, they will contact the ODFI and say, by the way, I'm not posting this thing. Let's talk about it. Okay. It just doesn't seem right. And I just want to be sure, I, in my capacity as receiving institution, just wants to be sure that you and your client, you're okay with this, that the thing is valid, that debit that hit at your house is really okay before I turn this money over to this account that's on my books here. Okay. Just again, a basic ACH lesson, standard availability rules for a forward ACH entry made available to the RDFI by 5 o'clock on the business day preceding settlement. It must be made available for withdrawal no later than 9 a.m. Local time on the settlement day. If it's not made available to the RDFI by 5 o'clock on the local time on the day preceding settlement day, then it must be made available for withdrawal no later than the end of settlement day. Those are forward ACH entries. Same day ACH entries, that early morning file, the 10:30 a.m. file, has to be made available. The entries from that file have to be made available no later than 1:30 p.m. local time. The mid-afternoon file, those entries have to be made available no later than 5 o'clock local time. And of course, the late afternoon file, those entries only have to be sent to posting by the end of the day. That's the normal posting. But if the RDFI suspects that, okay, this just doesn't quite seem right, I'm going to delay the availability. But I'm going to notify the ODFI that I've done that, and then why don't we get together and talk about it? And you can tell me if it's okay, and if it's okay, I'll release it, and I'll go ahead and let it post. So those are the two tools that the RDFIs will have. And so you need to understand if, again, in your role as a third-party sender, or if you're an originator in your own right, okay, these actions may start taking place come October. Now, one other option kicking in October is on the origination side. Okay, let's say I know it wouldn't happen to anybody on the call, but let's just say, for example, we made a mistake. Okay, we made a mistake. We sent it to you wanted to pay me and you sent it to Mark's account instead. Okay, our emails get conflicted all the time, and you could just say, oh, okay, I got Mark's account number. Well, you got the wrong Mark. Okay, well, you have the ability to, when we've made a mistake like that, you could always, on the origination side, you could always contact the receiving, the RDFI, and say, hey, would you send it back? Would you just send it back? Okay, I screwed up. I'm sorry. I didn't mean to make the mistake. Will you please send it back? And we would use the R06 to do that. But there were only specific reasons why we could use the R06. Well, this change that takes effect October the 1st. Now, ODFIs, you can request an RDFI to return an entry for any reason whatsoever. Okay, for any reason whatsoever, you can contact the RDFI and say, hey, look, would you send that money back to me? You don't even have to give an explanation as to why. You can just request just send it back. There's something wrong with it. I'm not going to go into it. Will you send it back? Okay. You're still going to indemnify the RDFI if they comply with the request. So that if let's say it's still in the account and the RDFI takes it out of the account and sends it back to you because you asked him to do so, and then the owner of the account says, no, you can't take that money. Well, you're the one who's going to get sued, not the RDFI. Now, the RDFI's only obligation is to let you know what they're going to do. And remember, they don't take the loss. All right. You can, as the originating institution, you can go to the RDFI and say, look, would you please send that money back to me? Well, if it's already gone, they're not going to take the loss on it. But if it's still there, then they can send it back. All right. So they can send it back. So, and that kicks in October the 1st as well. So just know you have that one additional tool in your toolkit to be able to get things sent back to you as well. Now, the other change the other proposed rule. Oh, I'm sorry. There's two other changes starting in March of 2026. Again, this is for you who are originating. They want us to use, not only want us, but they're requiring us to use 2 new standard descriptions in the company enter description field. Okay. So if you're originating payroll credits, if you're doing payroll processing for your clients and you're originating payroll files for them, those PPD credits will have to carry the descriptor payroll. Okay. All caps payroll. That goes in the company enter description field. That then gets placed on the receiver statement. And what that does is that helps everybody in the chain say, okay, this is a credit entry, okay, but this is a standard payroll credit entry. All right. Now, a guy should only have, and the RDFIs are going to be able to use that as they look at an account and they say, okay, if they're a salaried employee, they get paid once a month. Well, they should only have 1 payroll credit in their account. Okay. They shouldn't have 100 payroll credits in their account in 1 month. Okay. So they're going to be able to use that descriptor is going to kind of isolate that credit from other types of credits that are coming in to say, okay, this one's either, yeah, that makes sense. He gets paid every Friday and he's got 4 of these every month. Oh, okay. So these are okay. These are okay credits. Okay. Like Colin was saying, a kind of a risk-based deal. Okay. If I only have one payroll credit or 4 payroll credits a month, okay, that makes sense. If I have 400 payroll credits in my account, I got a problem. Okay, there's something wrong. Okay, and then the other new company enter description field that you'll have to start using in March of 26. Okay, and that's the no later date, by the way, is purchase. Okay, for e-commerce purchase, a debit to an account for an e-commerce purchase will have to use the WEB SEC code. Okay, and purchase well not only will it be on the WEB code, but it'll have the descriptor purchase on there. So again, institutions looking at it after the fact will be able to say, okay, this debit, that they bought something at Amazon or whatever it is. Okay. And so that would be a purchase that way. So we may have to update our systems to utilize these company enter description fields. Okay. Maybe not. You may be able to put them in today. And if you can use them today, okay, if your system has the ability to put them in, by all means, go ahead and do so. All right. But the latest allowable date is March of 26. Now, the one rule that they did propose that did not get balloted because apparently a number of people had a lot of heartburn with, was the actual formatting of the individual name field. Okay. My name, my payroll credit that's transmitted to that's transmitted through the ACH that get credited to my account will not only have my account number on it, will have my name in there. Well, that's been a free form field. Anybody, you could put names however in that field. And so what Notch wanted to do and did not ballot, but are now asking us to consider doing it voluntarily, is to adopt the individual name field standard that was originally proposed. Okay. RDFIs have a view of incoming entries as well as account profile and historic activity on receiver's account. A risk-based approach to monitoring incoming may include velocity controls, anomaly detection. Considered together, this may trigger suspicion of a particular entry, but when that suspicion arises, a name comparison can help determine the validity of an entry or a group of entries destined for an account. Okay. A credit entry with a mismatch between the name and the individual name field and the name on the account, or an account suddenly receiving multiple credits under multiple names, may indicate an account that is being used to receive illicit funds in a credit push fraud scheme. Okay. So, and that's where they are. So not just asking, it's not a mandate, it's not a requirement, but asking if we would to use the following standard for the individual name field. Last name, then additional last name if there is one, suffix, first name, middle initial. If it's a joint account, secondary receiver first name, secondary receiver middle initial. Okay. Or if the entry has two receivers with different last names, last name, additional last name, first name, middle initial, secondary receiver last name, secondary receiver first name. Okay. Truncate the field size to whatever it is based on the SEC code. And in Operations Bulletin number 2-24, they actually kind of translated into English for us. So if the receiver is Stephen Jones in the individual name field, it would be Jones Stephen, and they'd like us to use all caps. If it's Stephen E. Jones, then it'd be Jones Stephen E. If it's Stephen E. Jones Jr., it's Jones Jr. Stephen E. If it's Stephen E. Jones -Smith, then it's Jones Smith Stephen E. If it's Christopher H. Higginbotham, it's Higginbotham Christoph, and see, we run out of space. Okay, so we can't put Christopher H. We can't finish H because we run out of characters. Chris H. Higginbotham Smith, and it's Higginbotham Smith CHR. Just when you see it kind of in English, it makes a lot more sense than what they had laid out earlier in that. Don't have to, but they are not just asking us to do that. They didn't even send this to ballot. They must have gotten so many negative comments on this that they didn't even send it to ballot because they knew it was just going to die on the vine. Okay, it was not going to get approved, and so they didn't even send it. But they're asking us to do that, and I think, I don't know anything, but I think that folks didn't trust them when they said, and we're not going to make you do a name and account mismatch, because remember, under the ACH world, okay, as the ODFI. The ODFI has all of the warranties, all the liabilities, all the responsibilities. The RDFI is allowed to post based on the account number only. Okay, let me say that again. The RDFI is allowed to post based on the account number only because the ODFI has said, look, I'm telling you that's where it goes, and it's my responsibility. Okay, I've got all the warranties, I've got all the liabilities on that. Contractually, because we've all agreed to play by the rules, that's the way they've allocated the risk. The ODFI has all the risk, okay, on that, and so they don't have to do a name and account they don't have to do a name and account match, okay. And the RDFIs, I mean, maybe your itsy bitsy teeny weeny country bank might be doing name and account matches, but I'll guarantee you, Gargantua is not, okay. Chase is not looking at 6 billion credits a day to see if the name and accounts match. It's just not happening. Okay, and so doing it this way, if the individual name, if they can have a standard convention, then we can get to the point where we could do a reasonability check on it. But I think folks were afraid that NACHA might make it a mandatory, and of course, folks said, no, let's not do that. I'm not sure that's why it didn't go to ballot, but my suspicion is that that's probably what it was. Now, in terms of getting ready for 2026, NACHA has established a risk management resource center out at nacha.org. Okay, One-stop shopping is always the easiest way to go about things. Okay. And so what Notch has put together is this risk management resource center. Currently, there's 43 different links out there. There's going to be posting more. As I mentioned, there's going to be vendors that will come to the street. When they pass the web rule, the web debit rule a few years ago, that said originators of web debits had to utilize a commercial reasonable fraud detection system to validate the account number used in the entry before the first use of the account. There were vendors that came to the street with solutions. I'm sure there's going to be vendors that will come to the street for solutions for 2026 as well. But there's going to be a whole lot of information. Notch is going to help us with this risk management resource center. And you simply go to notcha.org/risk resource as well. Now, within the Notcha world, there's a risk management advisory group, REMAG. Okay, just a sidebar. If you don't like acronyms, stay away from ACH because we love acronyms. Okay, so REMAG, we call it REMAG, but it's the Risk Management Advisory Group. They came out last summer of 23, with response checklists for originators who have been victims of credit push fraud. Okay, and there's some things that an originator can do for an immediate response right after the event, and then kind of a checklist on post-mortem actions as well. And that's all out there at the Risk Management Resource Center as well. Notch put this together with ACH credits in mind, but it could apply to fraudulent wires or other push payments as well. This is just a way to begin the discussion and to begin the recovery. Hopefully you can recover these funds and that, but the fraudsters are being very successful as we go forward. But these rules will hopefully get out in front of it and help the ACH system at least. Won't do anything for the wire side, but at least help the ACH system try and deal with what is becoming an ever-present and ever-increasing problem as well. What questions can we ask? What questions can we answer on this? What questions can we answer on this?
Doesn't look like there's any questions being posted. I think we'll probably have to revisit this. That was a lot of information in a limited amount of time, and once everyone digests it, I think there will be more questions. So you can always reach out to AFC to request additional follow-ups, and we can even do another um, webinar just answering some of the questions. We appreciate the Marks again for giving us a good overview of some of these complicated new regulations that impact a lot of our members. And as we mentioned at the beginning, the slides will be available and a recording of this webinar will be available, and we will message all the participants and the members once that's available. So I want to thank Mark again for a lively discussion of a very complicated and impactful new rules. Thank you, Marks.
Thanks, Colin. Thank you, everyone. Have a great rest of the day.